This is the world of business globally in Nigeria and around the world. We call it Business Incorporated. We thank you for joining us from Channel's global headquarters in Lagos. I am Bosun Amafaye. So let's get started from the home front, where Nigeria's FMQ OTC Securities Exchange has launched the Standard & Poor's FMQ Cobranded Government Securities Index. In Botswana, the economy is set to grow by nearly double in the current fiscal year. Meantime, Tanzania says it needs $46.2 billion in investments over the next 20 years to revamp its aging energy infrastructure and meet the soaring demand for electricity. So let's get started. 30 minutes together. We begin with the market, starting off here in Africa. A very interesting day for the Egyptian stock market. A massive 1.54% on the EGX 30 index early today as we speak. The Egyptian market is the best performing on the African continent, 2.17%, trumping Nigeria and South Africa. Now let's get on, and you can see the numbers there at about 12 o'clock Nigerian time. The Kenyan market about a quarter of a percent. Nigeria is still trading water about 0.05%. And the South African GSE 0.28%, and that's coming down to about 0.26%. Egypt beating other major exchanges on the African continent today, as we've seen in recent weeks and months. Let's stay here on the continent and in Nigeria as part of the effort to improve price discovery and transparency in the Nigerian financial markets. The FMQ OTC Securities Exchange has established a strategic partnership with S&P Dow Jones Indices for the development and publication of a co-branded fixed income indices to support the Nigerian debt capital market. The board and management of FMQ today signed a memorandum of understanding with Standard & Poor's, which serves as the official launch of the maiden S&P FMQ co-branded index. Channels Television business anchor and producer Harriet Agbeye is joining us live now from downtown Lagos. Let's bring her in to give us update on what's happened today. Harriet, good afternoon.
Good afternoon to you, Bosun.
Yes, the event has started and ended quite a great day for Nigeria. What's in the main that has been achieved today?
Well, for a start, it is a milestone for FMQ OTC Securities Exchange, and it's also a milestone for the market. This debut S&P FMQ Co-branded Index is a welcome development, especially for retail investors. And like Coco actually says, as Bola Onodele Coco, talking about this particular index that was launched today, he said that the partnership that will ensure more global visibility for the Nigerian market as well as promote investors' awareness. Now, the adoption of the S&P Nigeria Sovereign Bond Index is, of course, a very broad way of tracking the performance of local currencies denominated sovereign debt publicly issued by the government of Nigeria in the domestic market, and more retail investors are the Sovereign Bond Index is a sub-index of the S&P Africa Sovereign Bond Index, which is a broad, transparent, and independent benchmark. Now, that's what the management of FMQ OTC Securities Exchange and the S&P Dow Jones Indices are hoping to bring to the segment of the market to encourage more local and foreign investors who want to play in that segment of the market.
Okay, Harriet, you're on the way back to the studios to give us the full detail of that, and you can watch that here on Channels Television Business News through the rest of the day. Harriet Agbeye, thank you very much, anchor for Business Morning and producer on Channels Business News. Let's move on to the Middle East, where shares in the Gulf's only listed stock exchange operator outperformed at intraday as most of the region moved a little because of soft global equities and an overnight decline in oil prices. Saudi Aramco says it's preparing for a domestic Sukuk issue. The Dubai financial market, that's the Dubai stock market, that's the one I talked about earlier, says he's looking at about 406% jump in his fourth quarter 2016 net profit. Intraday, the I beg your pardon, I need to take that again. Intraday, the Dubai financial market rose about 0.75% after it made a net profit of 78.5 million dirhams in the fourth quarter, 5 times what it made in the previous year. You can see the Qatar Stock Exchange down, however, by 0.5%, and the Saudi stock market about 0.24%. The biggest story out of Saudi Arabia is the Saudi Aramco's, the state oil corporation's part IPO. That is, everyone on the planet, every stock exchange is angling to get a part of that multi-billion initial public offering. Move on to Europe, where markets were hovering around a flat line this Tuesday as earnings and data continue to be the main focus for investors across from the United States. Look at Tuesday's earnings reports. BNP Paribas posted lower than expected net profit in its third quarter. BP, oil giant, however, also missed its analyst forecast when reporting earnings of $400 million in the last quarter of 2016. That was down 2% in early deals today. Let's bring in my colleague at the Frankfurt Stock Exchange, DWTV for Channels Television, Annette Westbach, to talk us through this and more stories making the headlines this Tuesday. Of course, Annette, you've been doing a lot more about the geopolitical reporting from France and all of that. But let's start from the United States. A lot of uncertainties over the global political landscape, Donald Trump and Brexit. Bring us up to speed, Annette.
Actually, the euphoria about Donald Trump's investment spending, I think, has vanished, and now the concentration is on rather chaotic political style, and people are taking to Twitter to actually look at what the president is thinking. So I guess, as I said, the reflation trade based on Trump's incoming new administration, it has faded away. Now people are more or less concentrating on what Trump really means going forward. But the markets today are actually quite friendly in Europe. Looking behind me, we see the DAX fairly trading upwards. I think there was some profit taking.
Backward looking, December 2016, industrial output down by 3%. That's a deepest decline in 8 years for Europe's largest economy. Explain this economic data to us, and where do we move forward from here for your economy?
The minus 3% was a shocker for industrial output in the month of December. But economists are quite unanimously about the fact that this is due to the bad weather. We had very cold weather in December and also then in January, and that is why mainly the construction sector, which is contributing quite a lot to industrial output here in Germany currently, was doing so badly. I think people are expecting industrial output to stay quite subdued also for the month of January, because, as I said, the weather was really cold and thus construction is not very active in these months. But we are expecting a strong rebound very soon to come. Looking at yesterday's new orders, factory new orders, this is a promising sign that actually economic activity in Germany is nowhere to cool down.
Then let's talk about earnings. As we speak now, General Motors in the U.S. is reporting its numbers, and it looks like the stock is climbing higher, about 1.4% pre-open on Wall Street. But again, if you look at BNP Paribas, that's one of the largest banks in Europe. So let's talk about these two companies in Europe. BNP Paribas on one hand in the financial services sector, British Petroleum in the oil industry. If you look at what has been out from Shell and from ExxonMobil, it's been really negative 2016 numbers. So is anyone surprised with these numbers from BP to start with? BNP Paribas, lower than expected net profit, on track, something like Deutsche Bank.
Yeah, BNP Paribas is actually quite disappointing. The shares went lower, up to 5% even, and that is because their last quarter was actually disappointingly slow. Across the board, actually, the bank was showing some weakness, and even though they attracted more assets in France, this was still disappointing, because also the CEO in the statement was showing some, I would say, irritations about the political destiny in its country. He was saying that the political uncertainties are also weighing on their business, meaning who is actually going to win the presidential election in France. In only 11 1 week's time. There is a risk that Marine Le Pen is going to win that vote, and if that's the case, we'll see political upheaval in France, which is of course the second biggest economy of Europe. So these results were disappointing. Moving on to the UK, British Petroleum, BP, also posted a disappointing set of earnings, and that is because they have said that they need $60 a barrel as oil price to be actually profitable. So currently they are not operating in a profitable mode, and that is because obviously oil rigging is getting more and more expensive. They need to cut costs, etc. pp. So this also is a company in more or less struggling mode, as the oil price was so low all these last years, I have to say. Also, BP shares were one of the biggest draggers in the among oil companies. They were lower by more than 2%.
Okay, thank you, Annette, for weighing in on this conversation today. Very important global business, economic, finance, and investment stories for today. Annette Whitback from Frankfurt Stock Exchange, DWTV4 Channels Television. Let's keep to that part of that conversation, the global oil market looking for some sort of direction. January was the first month in the implementation of the OPEC and non-OPEC haircut, 1.7 million barrels per day. Now with the oil count rig in the US climbing, we've seen a decline in oil prices. We're looking at the WTI oil price, 52.83 right now per dollar, down 0.34%. Let's bring on Demola Sumani, who is one of the research analysts at Financial Derivatives in downtown Lagos, here via Skype, to talk to us on this. Desola, very interesting. Good to see you on the program. Thanks for coming through.
Thanks for having me.
Yeah, so the market is looking for direction as far as the prices are concerned. And maybe you heard Annette speaking earlier. You see the numbers from BP, from Shell, from ExxonMobil looking a little bit nasty from 2016, I mean.
Yes. I mean, the IOCs are still reeling from the low oil prices that we saw in 2016. But this year, I mean, this week, for instance, the prices have been going down simply because of, majorly because of higher oil production in the US, rising rig counts, and higher crude stockpiles. However, there's the likelihood that these geopolitical tensions between the US and Iran may spill over into the oil production, and that, if it happens, would be good for oil prices.
So if 2016 was a little bit nastier, as it were, if I could just put it that way, how would you characterize, as a research analyst in Outlook, do you think 2017 will be a bit of a tapering, keeping in mind the need to cut output among member states?
There's a lot of optimism about the OPEC deal, and that's a major driver of oil prices in this 2017. The consensus of forecast for oil prices within the range of $55 to $60 per barrel, and there are reports that there's been about 60% compliance to the OPEC deal so far, with non-OPEC members such as Russia cutting as much as 100,000 barrels per day. But so far, we are still expecting the official OPEC report for production in January to see if there's actually been some production cuts, or it's just political talk.
Okay, and this is some money from Financial Derivatives Company. Thank you very much for weighing in on that conversation today. Now you have just some time to look into some of the other stories. You talk about this. Cassava is feeding millions of people across Africa, but lack of finances, poor planning, and marketing of the crop partly explain why farmers in Cameroon hardly view it as a lucrative business. But a Something Initiative is working on this called AgroHerb, an agricultural production and marketing agency working with the folks on the ground with small-scale farmers in the country to train them and help them access sustainable markets for their crop. So we'll come back after the break. We have a lot to talk about the Nigerian business of free trade zone logistics business. We'll look at the legal angle of things. Stick around.